What a mess, folks. What a mess. PVH stock down 22.2% here today. Retail clothing giant. Levi's down around 8% today. Guess down over 6%. VF Corp down. Ralph Lauren down about 4.5% here today. Tesla Maesla down 5 percentage points here today. Housing stocks got smashed today. RH down over 7%. CCS Communities down 6.8%. Redfin down over 5%. Rocket down about 5%. Enphase down over 4%. We've got to speak about some things. We're going to talk Tesla right at the top of this video, okay? I know a lot of people want me to talk Tesla in depth here. Valuation, does it make sense to buy? Does it make sense to stay on the sideline for now? We'll speak about that across the board, okay? We'll get that out of the way right off the bat. Second thing I need to get into today, what is causing stocks to fall? I bet you your portfolio is probably stagnant for the past 1 to 2 months or downtrending the past 1 to 2 months. Well, I'm going to explain exactly why that's going on right now, okay? Third thing we're going to get into is a retail wreck, my perspectives on that. And the last thing is recession tells. Do we have stagflation coming, okay? We got all those subjects here today. I need you to freaking smash that like button, okay? I know you must be a little frustrated, a little mad. Somebody said something today that got you a little in your ways. Smash that like button. Take out your frustration on that like button here today. And I also have something very exciting. The deal of your freaking life is coming 12 days from now, folks. The tax break sale. You know the government won't give you a deal, but I'll give you a deal, okay? Yeah, we haven't done a deal on that Patreon tier since November. So we're doing a 1-day sale on tax day, April 15th, $69. You get access to my #1 course ever, Becoming the Master Stock Market. You need that. Access to see the moves I'm making each and every week in my Patreon portfolio, plus access to the Patreon Discord chat. Pinned comment down there, enter in your info. We'll send you over that deal. It is a 24-hour deal, and that's it. And if you miss that deal, you're going to freaking cry your eyes out, okay? Alrighty, guys. So, speaking about crying your eyes out, Tesla shares fall after deliveries drop 8.5% from a year ago, okay? We all know the numbers by this point in time. If you don't know the numbers, where the heck have you been all day? They missed big time when it came to deliveries. They missed by a mile. They missed analyst expectations by a mile, right? Once again, analysts are wrong. Who would have thought it? But they even missed a lot of, in my opinion, Tesla experts. They even missed like true Tesla experts numbers in terms of deliveries as well, which was pretty shocking. Okay. Now, sometimes you just got to go in the airplane, 35,000 feet, and just take a little bigger view. Okay. Let's take a little bigger view. Tesla, in this horrible, I've heard this quarter discussed as horrible, awful, disaster, oh my gosh, the worst thing ever, okay? That's all I heard on TV all day today. And that's all I heard from people in terms of discussing this quarter. Oh, it was the worst. Like, how could Tesla put up such a bad quarter? Keep in mind, they just delivered more vehicles in one quarter than they did an entire year of 2019, okay? So, yes, the numbers were very disappointing, but sometimes you just got to zoom out a little bit. That's pretty darn incredible when you think about it in that context, right? Pretty darn amazing. Now, here's the problem, okay? Big problem. We have a revenue problem, okay? Clearly, obviously, if deliveries are coming in at that sort of number. So this means I would say Tesla's probably going to be somewhere in the negative 5% to positive 5% revenue range for 2024. And a lot of that depends on how the economy does in the back half of the year, right? And also, if they continue to ramp Cybertruck as successfully as they're ramping it right now, to really start putting up some big Cybertruck numbers in the back half of the year. So it's a bad revenue. Like for Tesla, this is horrible. This is disaster, right? It is. I mean, just to put it quite frankly, for Tesla, right? Tesla's a company that, people usually expect to grow 30 to 50% a year, right? And when we're talking about negative 5% to plus 5%, which is realistic where they're probably going to be by the end of this year, that's, bad for Tesla overall. So that's going on. It is what it is. This is what 2024 is. The other problem is probably not hitting 294 in terms of EPS. Probably going to look more like 250 by the end of the year, which if you take $166 stock price divided out by 250, you're basically paying 66 times 2024 numbers. Now, that may be fine if Tesla's growing at revenues of 30% plus, right? Because you can say, okay. But when the company is at negative 5% to positive 5% revenue looking like for this year, right? An EPS that is obviously not going to be in a great place for this year, it looks really bad, when it comes to from that perspective, right? It looks very expensive. When you compare it to its peers, right, which some people feel like Tesla's peers are Ford, GM, no. Okay, that is not Tesla's peers. Okay, if you want to compare it to that, you can compare it to that. I don't compare it to them. I compare them, they're a tech company. That's why people buy Teslas, because it's tech related, right? They don't buy it because of an internal combustion engine competing against Ford and GM. So I put them, and obviously then the million other businesses Tesla has past the auto business, right? I put them in the category of tech, so I'm comparing against Meta and other companies, right? Meta, you're getting 34% EPS growth in 2024 expected, trading at a 24 forward P, right? So we can call it about a third of, or a little over a third of what Tesla's trading at, but with way better EPS growth. Amazon, and by the way, Meta's my biggest position in the public count. Amazon's another big position, not as big as Tesla for me. It's Tesla's twin. I always said the best comp for Tesla is Amazon. And Amazon is expected to have 45%, don't be surprised if that number's low, 45% EPS growth here this year. And that trades at about a 42 forward PE, right? So way under Tesla. What about the stock that gets all the attention? What about NVIDIA? What about NVIDIA? Let's see. NVIDIA, you're getting expected 91% EPS growth in this year, trading at a 36 forward PE. So the moral of the story is, if you're judging just off of 2024 numbers, it makes 0% sense to buy Tesla if you're only judging off 2024 and what's expected to happen this year, okay? NVIDIA, Meta, Amazon, all those stocks look like way better buys if you only have the frame of mind of just looking at 2024. Okay, I can't debate that. Like if somebody wanted to debate me on 2024, like you can't debate that. Okay, Tesla's long term might be a very different story, and we're about to get into that. But in terms of just looking at 2024, the expectations, you can't make an argument for Tesla over an Amazon, over a Meta, over an NVIDIA on a valuation basis. It just doesn't make logical sense, okay? I just laid it out for you there. But we got to put some things into context here, okay? I have an EV stocks watch list on my stock tracker, right? It includes Workhorse, which I'm surprised they're still around. They're down to 21 cents. Nikola, which I'm surprised they're still around, right? They're under $1 a share. You have Rivian, which is all the way down $10. You have obviously Tesla. Then you have Lucid, which is down to $2. And then you have NIO, which is down to $4, right? How are these stocks faring? Well, Workhorse is down 83% in the past year. Nikola is the winner chicken dinner of the bunch. I don't know if you can call under $1 stock a winner, but that one's only down 20% in the past year. Rivian down 31% in the past year. Lucid is now a $2 chuck stock, down 65% in the past 1 year. And then you have NIO, which is down 56% in the past 1 year. Moral of the story is things are bad when it comes to all the EV stocks, right? And Tesla's holding their own despite everything that's been really working against the entire EV sector. Now, with that being said, a record 1.2 million EVs were sold in the United States in 2023, according to estimates by KBB. Now, this is fascinating because EVs are now up to a 7.6% market share of U.S. vehicles sold last year. That's up from 5.9% in 2022. And that number continues to increase and should continue to increase massively over the coming years. Now, when you think about this, right, Tesla's the number one player in the EV market, right? Now, that total market right now is under 10% share. And you have to ask yourself, okay, one, is there any competitive threat that could potentially knock off Tesla out of that number one leadership position, okay? Let's just think about that logically for just a moment. Is Ford going to knock off Tesla? Is Volkswagen going to knock off Tesla? Is BMW going to knock off Tesla? Mercedes? GM? Toyota? Honda? Hyundai? No. Okay? So there's really no credible competitive threat to Tesla that we see over the coming years, right? Which means Tesla's going to hold the number one dominant market share, right? In a market that, once again, my belief is over this next decade, we're going to near 100% EVs over this next decade, right? And right now it's under 10%. So just a quick math exercise, and you're going to find that, oh boy, Tesla's next 10 years are looking really freaking great. 2024, not looking great. The next 10 years, looking absolutely phenomenal. Unless EVs do not take off over the next 10 years and, the market share never gains again or something like that, right? Or if Tesla loses number one position. Neither one of those look very realistic to me. It looks like EVs will just continue to take market share, especially as supercharger network continues to be built out more and more. EVs will continue to gobble up more and more market share. And especially, you got to understand when the numbers really start pouring in and we get to 15% market share, 25%, 35%, you got to understand those numbers are bigger than the total market right now. So Tesla could all of a sudden produce an extra 500,000 vehicles, million vehicles in a year at that particular time, right? So that's the other fascinating thing there. So when you look at it from that context, Tesla's looking really freaking good, okay? Now, in the very short term, Cybertruck's going to be a huge help, right? Not the first half of the year. This is rampant. They're ramping the Cybertruck, right? But second half of the year, they're going to be producing a lot of Cybertrucks, and they can sell every freaking Cybertruck they produce for years to go in the future, right? And so Cybertruck will be a huge help in the short term, back half of 24 and then into 25, and I think the margins are going to be extraordinary on Cybertruck, right? Now, in the short term, people are looking at the used vehicle market as a negative for Tesla. And I'll be honest, you can make an argument of that this is a negative for Tesla in the short term because somebody might look out there and they say, okay, I can get a brand new Model 3 for whatever dollar amount, but I could get a used one here for Carvana for $27,000 with only 19,000 miles. I'll just get that, right? And maybe Tesla loses sale. So I can understand why that would be looked at as a negative in the short term, but this is the best thing for Tesla over the long term, right? This is where you got to differentiate short term versus long term. This is huge for awareness, right? The fact that Tesla, you can go buy a Tesla for $20-something thousand, right, is huge because there's a lot of people that can't afford $35,000, $45,000, $55,000 for a vehicle, but they can't afford 20-something, right? And so this is massive for Tesla's awareness to get more people in these EVs that never even considered an EV or a Tesla in general, right, that are now able to get these and now able to drive these around. And then guess what everybody does when they get a Tesla? They show all their friends and their family members. Oh, look at it, they can do this. And guess what? Everybody's inquisitive, especially if they haven't been educated about Tesla. Wait, how's this work? Wait, how long does it take to charge? Oh, what's the screen do? How fast does it go? All these sorts of things, right? You get all those questions. So you just get a massive educated population that just wasn't educated on these vehicles before, right? And the other massive thing when it comes to this is services. Services. The older the vehicles are, the fleet is, things will eventually go wrong. Things will eventually have to get fixed and problems will happen. More and more vehicles on the supercharger network, more and more revenue opportunities for Tesla over the long term. And somebody buys a Model 3 for $25,000, right? And hopefully over the next 5 years, they're doing better in their financial life. And maybe they go buy a Cybertruck 5 years from now or a Model X or whatever, right? This is a long-term game. This is chess. This isn't just some short-term, if you didn't hit the numbers this quarter, you're done as a company. It's not the way it works. It's the way Wall Street sometimes makes it seem and the media makes it seem. You didn't hit your numbers this quarter, you're out. Like running a business, you understand the TAM, the total addressable market. You understand long-term customer value, right? These are all extremely important things as like business 101 of running a business, right? So now Tesla was a first stock I spoke about in the video came out with 3 days ago, 7 stocks I'm buying, April 2024 edition. If you want to hear me talk much more in depth about Tesla, watch that video there. Moral of the story is I'm a buyer of Tesla. I hope it goes lower. And clearly there's still plenty of buying activity in Tesla because you saw that stock drop this morning and it got bought up. Like today could have been easily a down 7 to 10% day, but buyers are ready to snap those shares up left and right, okay? Next subject to speak about. Number one thing causing stocks to fall. Then we'll get into retail rec, and then we'll talk about stagflation, those sorts of things, okay? So, have you looked at your portfolio lately? Well, you might have noticed something. Your portfolio is probably stuck or downtrending, I would say, for the last 30 to 60 days. And if we look at the public count, sure enough, that's exactly what's going on, right? Public count, $2.2 million roughly, a month ago, and now $2,080,000, right? So, what's going on here? I'll show you what's going on. Yields, okay? Treasury yields. Look at where Treasury yields have gone, for instance, on the 10-year over the past month. Skyrocketed, right? So, here's the bottom line. If yields go up, stocks go down. That's the way the market's programmed right now, okay? Now, this is what could get us a correction, a nice size correction in the market. If the 10-year Treasury continues to go up, and let's say approaches a 4.5 number, 4.6 number, over the next month or so, we're going to get a nice correction in this market. This is what could cause it. Not guaranteed, but this is what could cause it, okay? Now, if we have more bad inflation data come out over the next month that looks like it's, higher for longer, or maybe even the argument starts to happen about maybe the Fed's going to go higher, it doesn't, any of those can cause the 10-year Treasury to jump more and more and more, which means stocks down more and more and more if you're talking about the 10-year Treasury goes up. So it's a very simple game right now. Now, the stocks that get hit the hardest by this, okay, are these sorts of stocks, housing-related type stocks, okay? This is just one group of stocks that get hammered, absolutely hammered if you're talking about yields going up, right? Company like Rocket, people have been trying to position in that, thinking, yields at bottom, housing's bottom, or up from here. If all of a sudden you're talking about the 10-year starts to go up, Rocket's going to get crushed like a souffle, along with a stock like RH, right? These type of stocks get hit the hardest. Now, in the private stock group recently, obviously we talk stocks in there all the time. I was talking about RH stock. RH is a company I really like, and I might buy it at some point in time, okay? But I was explaining to everybody in the private stock group, I'm not scared to lose this stock. If this stock runs away from me and goes to 400, 500, I'm not scared at all because I think it's coming back down, okay? And the reason being is when you look at a stock like RH, it's set up in such a horrible position here for quite a while, okay? Here's the deal. If the market goes down in a considerable way, RH is going to go down hard, likely a lot harder than the market. Look at how much S&P 500 was down today. Look at how much RH was down today, okay? So any weakness in the market is horrible for RH stock. The stock will get wrecked, right? Yields. If yields go up, RH goes down hard. Look at treasuries today. Big spike up, right? Big spike up. And look what happened to the stock price. So if yields go up, RH is going down, right? If we get a recession, guess what's going to happen? Yields, the RH is going down big, okay? So the moral of the story in regards to RH, I'm not scared to lose it. It's not a tech company. It's not some company that has infinite growth or something like that. It's a very cyclical stock. And it's got a lot of issues it's got to deal with. And for a stock like this to then go make a run to 400 or 500, it really needs everything to go right. It needs everything to be perfect. And I mean, just to be quite frank, that's a tough thing to pull off there, okay? Now, let's get into retail rec, and then let's talk about recession coming, stagflation, those sorts of subjects, okay? So PVH stock down 22.22%. That's such a perfect number that I'm even considering buying the stock. I mean, just because it's such a perfect number. I love my twos and I love my sequential. Oh, man, it's just beautiful, okay? Levi's down huge. Guess down huge. VF Corp down huge. Ralph Lauren down huge. All these sorts of clothing companies, retail type companies, right? Now, the reason they're down so big is Q4 declined for this company. Calvin Klein, Tommy Hilfiger. I believe they have other brands than that. Those are just their two big brands, okay? But the bad news was revenue guide for 2024, okay? They guided for revenue to be down 6 to 7%. Now, that is a recessionary type call. Here's why, okay? One, think about inflation, okay? We got inflation running 3% plus. Let's call it in the 3 to 4% range. So if you're talking about 6 to 7%, your revenues are going to be down. When inflation is running 3, 4%, that's about a 10 percentage point difference there. Uh-oh, that's a problem, okay? Big problem. Secondly, very important, if you're talking about that sort of damage to your revenue, and let's call it's about a 10% delta between, what that revenue is expected to be down versus where inflation's running, right? That's a very, I would say, recessionary call. If a company like this was just talking about 1 to 3% revenue down, I would say, okay, you know what? I think that's just company specific. They just got something going on with their company that's maybe hurt them in the short term. No big deal. I don't know, 6 to 7% with inflation running 3% plus, that feels more recessionary call, which is a little something to be concerned about, right? And, when you speak about Calvin Klein, when you speak about Ralph Lauren, these sorts of brands, I think these brands are brands that really cater to the middle class, right? Really cater to the middle class. And so that's where we're seeing a lot of damage in this economy. And I can understand why a stock like that sold off heavy today and other stocks, because you see something like that and then you're wondering, maybe it's going to be even worse than that, right? For their sorts of numbers there. So that's the problem. Is it's a business in decline right now, right? You're talking about Q4 revenue was down 1%. Now you're talking about the full year down 6 to 7%. there's no debate. It's a company in decline, right? And until you get some sort of, you can sniff it out in terms of, a quarter where all of a sudden you have sequential growth and a better guide or something like that. Until then, people don't feel comfortable owning a stock that's clearly still in a downtrend, right? No different than Tesla. Tesla's down 5% today, right? Well, because a lot of people were selling that stock, a lot of Wall Streeters, because they don't feel comfortable holding a stock when the business is still in decline. They want to see something. They want to see some glimmer of like, okay, we've reached a bottom. We're about to reach a bottom. We're about to go up from here. Okay, this is, we don't know where the bottom's at for a company like this right now, right? Now, this goes into Nike and Lulu, right? Nike and Lululemon, both those companies didn't really sound greatly bullish for 2024, right? Nike's revenue guide was extremely weak for 2024, right? And then Lululemon, went from 29% growth in North America to this last quarter, 9%. What's this upcoming growth quarter for growth for Lululemon? Are they going to grow 5%, 3%, 7%? Are they going to decline? These are actual conversations you have to take serious now at this point in time, right? And you look at a company like Nike, some people are like, oh, maybe it's just specific things going on with Nike. No, Nike's actually holding up really well if you look at their business model versus some of these other companies, right? And so when I look out there, it doesn't look great from a kind of a retail perspective, right? And that definitely should be something the Federal Reserve is taking very serious. You can't have the biggest retailers in the world that really cater to the middle class coming out and reporting these sorts of really disappointing guides in kind of what's going on with their business and not kind of wake up a little bit and be like, maybe we should do something here. Maybe we should make a move. Maybe we should consider maybe changing our stance a little bit, because I'm telling you, that's not good. These sorts of, if you talk about companies like Lululemon might have trouble growing in 2024, that's a company that's usually insanely strong growth. So if they don't grow, it's a disaster. If a company like Nike has a bad year this year, if you're talking about companies like PVH and these others not growing, shrinking their businesses, it's not a good sign. And here's the deal. When companies have shrinking businesses, what do? Cost cut. They close down stores. They fire employees. They do layoffs, right? Which then leads into, obviously, issues in the overall economy. And then you're talking about a whole different set of problems you have at that point in time. Now, this leads us into recession talk. Let's talk stagflation, right? So here's what we're just looking at very recently, okay? This is all very recent numbers and stuff. It's not good, okay? I'm just going to be honest with you guys. It's not good. Darden Restaurants came out last week and announced their earnings, okay? The numbers were bad as far as the guidance went, and even in the past quarter. I got more bullish on Cheesecake Factory after I saw those Darden restaurant numbers because they were so freaking bad. And I'm like, dang, Cake's actually doing great in this environment considering how bad Darden's looking. Now, Darden owns the biggest big dog restaurant chain you want to look at, okay, in terms of sit-down restaurants. They're the big dog of them all. They own a bunch of very successful restaurant brands, but the most successful and the most famous is Olive Garden. Everybody knows Olive Garden. And Olive Garden usually always has a super long wait. It's Olive Garden, okay, the OG. And the reason Olive Garden usually has a long wait is, it's decent food. It's certainly not the best Italian food, right? I think anybody that knows Italian food, Olive Garden's not the best, but it's certainly not the worst. And most Americans like Olive Garden. It's pretty cheap. It's almost always under $20 a person, but there's a lot of dishes you can get for under $15. The unlimited breadsticks and salad, all those things, and it's consistent, right? You go to an Olive Garden in Pennsylvania, it's the same as going to an Olive Garden in Austin, Texas. It's all the same, right? But it really caters to under 100K type income folks, right? And the numbers aren't good. They were really, really bad. The guidance was bad. It was negative. Not what you want to see, especially with inflation running 3% plus. So if you're talking about your numbers are going to be negative in an inflationary environment of 3-4%, no bueno, okay? PVH, and keep in mind, a lot of these restaurant brands are going up on price. So if you're going up on price and your revenue is going down, like that should almost never happen, right? PVH, we just spoke about them. Really bad guidance out of them. That was shocking. That's why the stock was down 22% today, right? Lululemon got massive deceleration in growth. Nike had weak guidance. Tesla, bad numbers. They were so bad that they were worse than the bears expected. You know how bad you got to do for even the Bears to be like, whoa, they even did worse than we thought? You got to do really bad for that, right? Or H numbers were a complete disaster. I know the stock spiked up the next day, and by the way, it's given up a lot of those gains. But those numbers were a disaster. RH income statement was horrible, horrible. And then Apple, we're getting very recent, if you look at Apple's latest earnings, but then we just heard recently about a report of Apple sales potentially being down 30% in China. Like, what? Like, that's insane. Like, is Apple going to report a negative revenue number this quarter? Are they going to? If it is negative, is it negative like 3%, 5%, 7%, 10%? What are we talking here, right? So this leads into a serious consideration. And I don't know if I've ever really talked about stagflation on the channel, but I started talking about it last week, and I think it's going to be something that we're actually going to have a talk about over this next 6 to 12 months. I think it's serious. Stagflation. It's a serious risk that has to be considered. I do not think it's a foregone conclusion that we're going to have stagflation, but I think it's really a serious consideration. And I think you're going to start to hear a lot of talk over this next 6 to 12 months about stagflation. I think you're going to hear more talk than you've ever heard in your entire life about stagflation. And the reason being, when I look at these companies, they're trying to raise price, but they're talking about revenues going down, right? Which is very stagflation-esque. I mean, when you think about stagflation, it's like demand's going down, but your cost of doing business continues to go up, right? And so you kind of keep having to raise price, but then that can hurt demand even more, which can then lead to unemployment problems and then lead to GDP problems, right? And so I think there's a lot to be considered. I'm glad I'm not Jerome Powell, because I think this next 6 to 12 months is about to get really, really serious for him. I think 2022 was easy for him because it was like just raise. Inflation's out of control, raise, right? I think 2020 was cake for him because that was, obviously with Rona going on, it was like lower rates, do whatever we got to do to backstop this. I think 2021 was a challenging year for the Fed, and they obviously messed up really bad. And I think 2024 is going to be a really challenging year for the Fed, and we'll see if they mess up. But yeah, businesses are going up on their price, on their customers, and the demand's going lower. And so we'll see how all this shakes out. But you know who's not? Me, okay? That's why I'm doing, you guys, the one-day sale. I don't want stagflation in this economy. We're dropping the price for one day only, $69. Get access to my #1 course ever. See the moves I'm making. Get access to Discord chat. Pin comment down there is 12 days from now, folks. Help stop stagflation. Yeah, if I was doing stagflation, I would be going to $145 for that tier instead of $125. But we're doing $69 for one day, folks, okay? Prevent stagflation. Pin comment down there. Much love and have a great day.